this is Josh Taylor with Trade Advisor Pro, and I want to thank you for checking out our video today. Now, before we get started with today's free Forex training video, I want to give you a chance to pause this video right now and go to our website. Trade Advisor Pro offers you free Forex training videos, and trade alerts. And folks, you do not want to miss our trade alerts. We send out a bunch of trade alerts every month that are top rated in the industry, where we send you our exact trades right to your inbox. Pause the video now, go to tradeadvisorpro.com/free, and all you have to do is register and then come back to this video, and we'll be sending you a lot more goodies to help you with your Forex trading. Enjoy today's training video. Alright, what I want to do right now is actually take you through the EURCAD trade and what I see and why we took this trade in the first place. So what I have here is a quad screen setup of the EURCAD. I have the daily chart here, the 4-hour chart, the 1-hour chart, and the 15-minute chart. Now what we're seeing here on the daily chart is ever since this swing high, which was February 27th, 2012, once price hit this swing high, that we've continued to see bullish momentum. Now how do we tell if we have bullish momentum? What you'll see here is a series of lower lows and lower highs. Okay, now you see there's a high, then a low, then a lower high. In other words, this high is lower than this one, a low. Now here's what we saw. Price was consolidating down to this line. Okay, so you're getting a squeeze effect, but for the most part price was trending down. In fact, I'm sure if you draw a trend line, you see that price was working its way down this line. This is what's called a pennant pattern. We were going to actually, what we would end up doing with this trade is seeing a breakout to the south side. Okay, so back over the last couple of weeks, we've been trading this pair pretty much in this kind of semi-range in this area here, from about the middle of the first week of May. So we've been pretty much trading this pair somewhere in between here and here as the bottoms. Actually, in reality, we were actually buying this pair at the bottom of this range. You can see how it's solid bottom here, a solid support level at 29.43. See that? Solid support, and it may go through a few pips here and there, but for the most part, this level at 29.43 has been a very strong presence. Okay, and I want to show you what happened today. So we got into this pair, into this trade. Its price had originally broke down through this bottom line that we saw on the daily chart. It's not a perfect level, but this level-ish, we're going to call it. Okay, when it's finally broken down through here, so we were looking at, like I always say in our videos, that support becomes resistance, resistance becomes support. If you look at the hourly chart, once price broke down through that level, it struggled very much, and at one point we were up a pretty good amount on the on our profit here. In fact, we were up 90 pips at one point. Okay, and so price broke back up through, came down, broke back up through. Now here's what we're seeing here. We are seeing what's called a retracement. Now you're never going to see price just dump straight down, and when you do, you never get into that trade. It's called chasing the market. What we're looking for is a retracement off of this drop down. Okay, so we're looking for price as it's going down. When we're looking for an entry, we're looking for price to come up. So the way to do that, let me delete this line. We like to look at Fibonacci retracements. Now this is a little bit trickier to pull a good Fibo level. Actually, I think on the 4-hour chart it was easier to pull one. Okay, because we can see a solid swing high. You can see that we had the swing high here on May 11th, right here, and price came down right in here. Now watch. We're looking for an entry. If price is going down, 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 you jump on the bandwagon. This is called chasing the market. And what will ultimately happen is you're going to get stopped out. So what we were looking for is, using a Fibonacci retracement tool, is a solid retracement of this pair. And what we saw here was 28.71 or 28.70-ish, which is the price we actually got into at this trade. that we were not only on our previous support level, but we were also at the 38% retracement level. So we looked at this as a good opportunity. Now the reality is, looking back now, I feel that the 50% retracement level would have been a more solid level. Because if you look here, if you remember what we've been trading on this pair for the last several weeks, and I've been trading this pair on and off for months, that price was solidly rejecting off this line. Even when it didn't make it to the upper support level, upper resistance level, it was still the original support was still the original solid support. Okay, so today what happened? We had a news announcement that caused a spike. Now we're in this trade here, right? We sold here. We want price to drop down. It's a few pips above. It's been going down, up and down 15-20 pips. It'll do that for a little while until price continues to drop down. Okay, why? Because on the daily chart we still have bearish momentum pushing this price down. But today we had a news announcement that caused a spike in this trade, all right, and almost right up to the 50%, 61% fib line actually, which would have been a really strong entry for this, which was also close to our original support level. In fact, if we pull our support level down a little bit more to here, see if I can get that line to move for me. It's kind of stuck. I think I need to reboot my computer. But if you see that this line, actually this would have been a little bit better level, that if we would have put a sell entry at our 61% Fibo level, that this would probably have been a more solid entry point than the 38.2. But we have our stop up into the 79 level, which was I wanted to make sure I had a stop approximately 30 pips above this level, 30 to 35 pips above the support level. So we have a stop up here. So the price shot way up. We did not get stopped out. Had a couple emails today saying, hey, what's going on with this thing? Just relax. Let the pair move. You got to give the pair time to breathe. Okay? So next time, when this price starts moving its way back down below our line, and it continues to push down, we're probably going to take our first profit target around 100 pips, and then we'll move our stop to break even and allow this pair to trade. So anyway, that was just a very quick video on, so that, you know, I had a lot of customers ask about this pair today because this thing moves like crazy. It's very jumpy. You get a news announcement, this thing can move 100 pips on the snap of a finger. So which is why we definitely want to have longer and wider stops on this pair. And but I just want to make sure I put together this little video to our customers to let them know a little bit about why we took this trade and what we're doing with it. So anyway, have a good one, and we'll see you on the other side. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free forex training videos, and free forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.